name is Laurent Picard and I'm a student in accounting at the Cégep Garneau. So today I'm going to talk about financial statement analysis. This kind of analysis can be made either by an external or an internal decision makers to the company to help to make better business decisions. So to help you understand this concept, I'm going to make the horizontal analysis and the financial ratios analysis of Spade Corporation.
There are three main methods of analysis, but I will only concentrate on two of them, the horizontal analysis and the financial ratios. The horizontal analysis is useful to compare a company's financial condition and performance across time. In details, it measures the change of amount on the financial statement by dividing dollar change by the base year figure. So let's compare 3 years of Kate Spade income statement with an horizontal analysis. In this case, I will use guidelines to compare those results. If we are starting with the revenue, we can see that the revenue has increased of 47% in 2013 and 109% in the next year, which is really good for the company. Total operating expenses have also increased for both years, but less than the revenue. In consequence, the net income is bigger in 2014 than in 2012, which places Kate Spade in a very good position. Let's continue our analysis with the financial ratios. I decided to analyze two different categories of financial ratios, profitability and liquidity. First, for the profitability of the company, we have to analyze the profit margin. If we divide net income by revenues in the income statement of Kate Spade, we end up with a profit margin of 14% in 2014. Comparing these results to the industry of textile and apparel clothing, which had a profit margin of 8% in 2014, helps us to understand that Kate Spade keeps more in earnings out of every dollar sales than the industry. The second profitability ratios is the return on assets. In the Kate Spade's balance sheet, if we divide net income by total assets, it gives us 4% of return on assets, which suggests that the company is not really efficient by using its assets to generate earnings. The third ratio is the return on equity. If we divide net income by shareholders' equity, the ratio is only 7%. Comparing to the industry, which is 16%, Kate Spade doesn't generate a lot of profit out of the money shareholders have invested. Finally, in the second financial ratios category, which is liquidity, we have to analyze the current ratio by calculating current assets divided by current liabilities. In the 2014 balance sheet of Kate Spade, the current ratio is 2.28. If we compare these results with guidelines, we understand that a ratio under 1 suggests that the company would be unable to pay off its obligation if they came due at that point. So the higher current ratio of Kate Spade indicates that the company is more capable of paying its obligations with its short-term asset.
In conclusion, Kate Spade Corporation is in a really good conditions because most of the results from the horizontal and the financial ratio analysis are positive for the company. There are a lot more of financial analysis that could be done, but it was a brief summary of Kate Spade performance over the past years. So I hope my video helped you to understand this concept, and thank you for watching me.